Welcome to the Times of Industry show. Today we have a returning guest. It's Mr. Jason Bodner, and his service is called mapsignals.com. Every time I have him on, he enlightens about what is going on in the market. And what I really like is that he's been right every time that he came on. So with that, I am very excited to have him on the call today. As we're doing this interview, late October, with 6 days to go until elections, the markets are absolutely tanking. So I'm going to air this tomorrow, Thursday, and we shall see exactly what's going on by the time that this goes up in the air. Jason, thank you very much for joining us.
Hey, thanks for having me again. Always a pleasure.
Yeah. Let's start with some fun questions, just a yes and no, yes or no, and then we'll go into the deep dive. But I'd like to get your take, just spontaneous questions here. If you had to do it, would you go long or short Tesla?
Long.
Long. Okay. If you had to pick, would it be Biden or Trump?
Tough.
Not your own vote. Who's going to win?
I think Trump has a chance.
Okay.
He has a real chance. I think Biden has it. It's a toss up. That's not a yes or no. That's a tough one, but I think it's way closer than the news tells us. Let's put it that way.
Okay. I think you'll get a lot of likes from the audience. Okay. Tech bubble or tech expensive?
Tech bubble or tech
expensive. Is it an expensive NASDAQ 100 or is it a bubble NASDAQ 100 right now?
It's an expensive NASDAQ 100.
Okay. Interest rates staying zero for the next 3-4 years or going up? In general, do you see hikes from the Federal Reserve in the next 2, 3, 4 years, or is it going to stay as it is right now?
I think interest rates stay lower for longer.
Okay. Lower for longer. Interesting. Gold.
Yeah.
Below 2,000, a bargain or overdone?
I would say overdone.
Okay. Well, that's going to
I'm not going to make friends. I'm not
going to
make friends.
Exactly. But let me ask you this. Silver. It's an interesting metal. It's only half of what it is nominally on its all-time high. So hasn't pierced its all-time high this year or this in the last few years. Is it undervalued or is it overvalued a little bit here?
I still think it's a little bit overvalued. We saw that parabolic rise and subsequent crash to earth, but it's still, 1 year still higher than it was. I think it could go a little lower.
Okay. This is going to be interesting to see what the comments are. And then last one
don't hate me.
Last one I have for you is, will the market tank a lot if Biden wins because of proposed tax hikes? Or do you think that this is sort of priced in or not going to be violent? What do you think if Biden wins? What would you say about this whole tax thing? Or overhyped or causing material damage?
I don't think it causes material damage. I know this will also not make me friends. I don't see a huge tank.
Yeah.
If anything, I would see a rotation in sectors, in terms of what would attract capital and what wouldn't.
Let's start with that. So what is the rotation? If Biden wins, what is this rotation we're talking about? What is out and what is in?
I think we, based on his last debate and what the media seized on in terms of his view towards energy, I think we would see lower energy prices. With that said, crude oil today is down 5%, and that thing has just been getting crushed. And also, Biden said I would phase out energy by 2050. So, we're talking 30 years. So having an immediate impact would be a little harder to see. I do continue to see rates lower, maybe less out of the industrials and sort of materials and like the infrastructure trade that originally boosted when Trump took office. I do think we continue to see tech strength, but there's going to be some reactions to policy and all those things if he takes office. So it's hard to say specifically which sectors would rotate. But again, keep in mind, I kind of see everything through the lens of what I view big money doing right now. And then we try and extrapolate what we'd see for the future.
Is big money going into banks?
Big money right now, overall,
Yeah.
and we can talk about this in a little more detail in a minute. Just think of it this way. If you were managing multiple billions of dollars today,
Okay.
and even though you get fees to manage that money,
Okay.
you want to bet on as sure a thing as you can, right?
Okay.
We're headed into this election. I think anyone would agree that both sides have a chance of winning. So there's uncertainty. And when there's uncertainty, what we tend to see is these big money accounts, big money managers taking risk off the table. They don't want to be exposed into an unknown.
Okay.
And, we can go over this in a little more detail. I can share my screen.
Go ahead. Whenever you want.
Yeah. Okay. So really quickly, we did a study. This is a Map Signals white paper. Let me get it up on the screen here.
Okay.
We wrote a white paper looking at the election. Oh, yeah, you would need to enable me for screen sharing. So
1 second. Let me be techie.
I'll talk while you tech.
Let me try.
We measure everything from something called the Big Money Index. And what is that? That's a proprietary index to Map Signals. And we look at thousands of stocks every day, 5,500 US stocks every day.
And try to share now also, by the way.
Okay, yeah. Let's see. Share screen. I can do it. Okay. We look at 5,500 stocks a day.
Okay.
I'm going to scroll up. I don't want to make anybody nauseous here. Okay, so we look at 5,500 stocks a day.
Yeah.
They fall into this filter, and then we look for when big money's moving in and out of stocks. That drastically reduces that number.
Yeah.
And then we look for when big money is buying or selling. Typically, we get about 66 buys a day and 34 sells. It happens on 100 stocks out of 5,500. So it's rare. Yeah. So let's think about that. Big money managers like Fidelity and hedge fund managers like John Paulson and Paul Tudor Jones and all the names you read about, Warren Buffett, they can only be so active every day on so many stocks. So it stands to reason maybe 2% of stocks stand out. So that's what we do. So you can go to our website, mapsignals.com, and download this paper. It's all about the Big Money Index. And what I'm going to show you how you can use it to help guard yourself against this election. We still have 6 days, like you said. All these signals, we add them up every day, buys and sells, and then we get a 25-day moving average. So it's a little bit more than a month, and we get to see, is big money moving into the market or moving out? So we plot this on an index. That's this yellow line here. And you can see when you had me on your show here in March, I was saying, get ready to buy stocks. It was right around here. That's because this little yellow line turned and big money was plowing in. It was before we had that major lift. I said, buy stocks. That the NASDAQ rallied, I think, 50% from when the days before we spoke on the show, 35% from the day, I spoke on the show.
Yeah.
But what's important is you can see that yellow line up here in January peaked and started to fall. So big money was coming out of the market, but the market still went higher. And then big money was puking out of stocks like the rest of the world. But when things got horrible, they started buying. And that prefaced a massive rise in the market. And then what did we see? Over here in July, the big money index peaked and started to fall. We didn't see the market start to react until September. And the reason...
Is that July or June, with the peak? Because a lot of stocks, many of them have peaked on June 8th.
That's late June. And I can find the exact date for you, but I don't have it in front of me. But yeah, it looks like it was late June. This stock that peaked June 8th, you can see that here, that bump. But
Mm,
what's interesting
okay.
here, and the reason this is interesting, is we look at everything through what is big money doing. They've been coming out of the market.
And can you clarify what big money is, just so everybody understands it? Because we've read a lot about big money being in cash for the last few months and not entering markets and having institutionals thinking there's going to be a second wave, not of the virus but of selling and retesting of the low. So we've heard a lot about big money is in cash; it's not invested. Obviously, this chart shows that big money came in uh, in April already.
Huge. Yeah. So
Yeah.
what is big money? I spent 14 plus years on trading desks. I ran derivatives for Cantor Fitzgerald. I had 14 traders working for me, talking to hundreds of accounts. And these accounts were hedge funds, pension funds. We talked to sovereign wealth funds, big time money managers like Fidelity and places like that. Big money are people and institutions who manage a lot of money. I mean, it is what it says it is. So why that's
Okay.
interesting, Liors, 3 years ago, and this is also in the white paper, JP Morgan published a study that said basically 90% of all volumes on the stock market every single day, 70% of them are institutional and 90% are non-human. So basically, mom and pop, everyday investors make up a very small percentage of the market in terms of activity, but there are a lot more of them. So when big money moves, you want to pay attention to what they're doing, because look at this yellow line. They tend to know before. And that's why I had so much conviction coming on your show March 30th and saying, time to buy stocks. I mean, look at that. That looked like we could have legged way lower. And I know I got a lot of people who didn't agree with me in the comment section, but I go by the data. And that's what I said back then. I'm
Yeah.
looking at the data. It's telling me they're buying. So where does that bring us now? This chart cuts off because it was a few weeks ago that
Okay.
we published this paper. But why this is interesting, Lior, is we looked at every election year since 1990. There
Okay.
were 7 of them. I'm going to go down here. You guys, again, can go to mapsignals.com, download this whole paper. It's really interesting. It's written in plain language. But here's what you're going to see. Do you see those charts
Yeah.
on your screen?
Yeah.
Notice every election, and it's not a hard, fast rule, but you see a clear pattern. Big money tends to take their chips off the table, and that blue vertical line
Is the
is
election?
election day.
Yeah. So they sell before, they buy after.
Yes, and it's very clear. And again, this is our chart right now. Since then, we had a little lift in October, and it started to fall again. And we're definitely going to have a lower big money index tomorrow with the market falling 3%. So
Yeah.
why you're asking me, if Biden wins, will the market tank? Every single year, the market did not tank in an election year. It might have continued to drift a little lower.
Yeah.
I think the one big exception was 2008, but as we
Uh-huh.
know, in March of 09, that's the ultimate bottom, and it rocketed up from there. But even in that crash, big money started buying stocks after the election because there was more conviction, less unknown, less uncertainty. That's what we're seeing now. So when you ask me, are they plowing into financials? The answer is they're kind of waiting and seeing until the election's over.
So let me ask you something. There's a lot of questions.
Should I switch back my screen here?
Whatever you feel comfortable with.
Yeah, I'll try and figure out how to. Oh, stop share. Sorry.
Stop share on the top.
Hello.
Everyone's trying to get Zoom right. So, Jason, there's a lot of talk about the election getting contested, like that we won't know who's going to win this initially. But that will obviously put that huge cloud of uncertainty on this elections, perhaps even longer than November 3rd. So, should people really brace for a few weeks of uncertainty?
Yeah,
Yeah,
I would. I mean,
yeah.
as I would love an uncontested election, one way or another, regardless of which candidate I back or
Yeah.
you. We just don't want it to be contested.
I'm not an
If it
American.
is, huh?
I don't have a dog in this fight. I'm not an American.
I know, even though there are a lot of non-Americans in the world who side with one side or the other,
Sure.
it is a hotly contested election. It's contentious, all those things. What we don't want is a contested election, because ultimately there will be a resolution. It'll just, like you said, drag on and be agonizing and annoying for a long period of time. But again, our data has been pointing to expect volatile markets as big money comes out. Because don't forget, when big money is in the market and they're buying or selling, they're adding this sort of ballast, right? It kind of helps anchor the market. So when they come out, all these high frequency traders can get in and go crazy on days like today and shove down the market 3% and then buy it back and get all this whippiness. So I've been expecting that level of volatility. To your point, if we got a clear winner, then I would expect stabilization, money flooding in. We would be able to see which sectors are going to lead. But if it's contested, yeah, there's going to be even more uncertainty. And to add on top of it, Leo, you know, coronavirus cases are spiking all over the world.
Yeah.
Europe, there's talks of new shutdowns. In the United States, it's spiking. And if we go back into a period of restricted economic activity and heightened certainty, then yeah, I would expect more volatility in the stock market.
Are there any sectors that are really coronavirus hurt? In other words, hotels, casinos, airlines, cruise lines, etc., that big money is going into right now?
I think it's based on earnings right now. We're right in the middle of earnings seasons. We've seen some buying in discretionary stocks, right, which were largely hated, especially because of coronavirus. Some of the casino stocks have, you know, just gone straight up because there's pure speculation that we're going to reopen and there's going to be a rejuvenation in there. But again, I think a lot of the recent moves we're seeing is not necessarily driven by big money having a high level of certainty. There's still a lot of day traders out there. There's you know, a lot of algorithmic trading, but sectors that have been hurt have been some seeing some capital moving in our discretionary companies. You know, some of the big brick and mortar retail stores are starting to spark back to life. Some of the hotels. But, you know, if for the bargain hunters with a lot of patience and resolve, I think there are great bargains to be had there. But I haven't seen, you know, a light go off saying, hey, pay attention here. Big money's flooding in.
Okay. What do you think of the Robinhood phenomena, the millennials coming in and basically in the last 7 months trying to replace either their incomes getting lost or whatever, flooding into markets, sending some stocks into pretty wild
stratosphere.
Yeah, pretty wild valuations. And yeah, just your old take on this. Is this sustainable? Do you think the millennials have now come into the world of stocks? And just your general thoughts on the whole scenario here.
Yeah, you know, we might have even touched on it when we spoke late March, but we had a really weird, unique confluence of events, right? The world shut down. Everybody had to stay at home. And on top of that, you couldn't go to work. And even if you could work at Zoom, nobody's looking over your shoulder anymore. And guess what? The United States government sent everybody a check. So you had the Robinhood CEO saying, yeah, we see a lot of deposits of $1,200 and $2,400. Those were the millennials flopping their stimulus checks into the market. And buying up stocks. So a lot of that rally was partially, I don't want to say a lot, but that rally was partially fueled by millennials coming in and buying up stocks. Now, the danger, of course, is when you get a false sense of confidence. You're like, I made 53% and I'm a new massive trader. And then you get your hat handed to you on a certain day and people lick their wounds and get margin calls and nasty things like that. So in answer to your question, do I think a new generation of people are in the stock market? Yes. It's not necessarily for the right reason. I'm not a speculative guy. Like,
Sure.
when you ask me those questions, yes or no, it's hard for me to say because I'm like driven by data. I like solid bets in my favor. I don't usually say things unless I have a very strong likelihood of winning.
Okay.
But that's how I see things. So if you have a bunch of young people who are just betting on the markets, you want to see young people who are contributing to their 401ks and building an investment plan over years. That would make me more comfortable. But yeah, there's a lot more speculative traders, day traders, and things like that in the market. We heard Robinhood CEO say it himself, It's
Yeah.
interesting.
Okay. Let's talk gold. What's happening with gold in your opinion? It had a good year. It started the year up, and then coronavirus took it down with everything going down in March. And since it bottomed in the mid-March, went to all-time highs on 5th of August, and since then it's come down. Where in general, what do you think gold is? I'll give you like both of the sides. One says M2 money supply has really gone up this year. Deficits, the national debt, etc. Stocks are so expensive, so hedging with gold is actually cheap with negative interest rates environment in real terms because of the 10-year yield minus the CPI. So there's all sorts of favorable scenarios for gold on one hand. On the other hand, it's moved up a lot. So I'm not asking about the next month or two. I'm just asking in general. You see Wells Fargo, you see Bank of America, you see JP Morgan. They're all saying gold is going to 23, 25, even 3,000 an ounce. And their thesis is based on everything that's going on right now. Do you think gold is actually peaked for the next few years? What is your take on it, or do you not have a take on it and just have a sense of things?
I don't really have a major take on gold because I tend to look at individual stocks. If we just look at a chart, it looks kind of like it's peaked for a little bit. With that said, Lior, I think a lot of it has to do with the election, things of uncertainty, things that we just don't know at this point. Gold is the safe haven, right? That's where people are going to plow their money in when they don't know what's happening. So there is certainly the case for gold to reach new highs, but once that uncertainty abates and there's a little bit more of a known, I would expect money to flood back into equities. And I know that doesn't make me a popular person on this show, but if you were to look at the return you get in equities just holding the S&P 500 on a dividend yield basis, I think the current dividend yield of the S&P, as I'm looking at it right now, there's a site called Multiple. It's 1.78% versus bonds, as you highlighted, the money supplies, there's a lot of liquidity. So the 10-year treasury yield is 0.75%, 77 basis points. Okay. So the thing is, bonds are taxed at an ordinary income rate, maximum taxable rate of 40.8%. Dividends are taxed at long-term, dividend tax rate of 23.8% max. So if you put $100 in a 10-year bond at a, 77 basis point yield and a 40.8% tax, you're going to end up with 46 cents of return on your $100. And if you bought the dividend, if you bought the S&P and you just collected the dividend, you would earn $1.36. So it's
Yeah, 3 times.
yeah, it's a significant favorable ratio to put your money in stocks. So once the uncertainty is out of the way, we have a president in the United States, coronavirus, maybe they announce a vaccine. That doesn't set up as a backdrop for me, for everybody to rush and buy gold, because gold is a hedge for uncertainty. There's going to be certainty. There's going to be money flooding into equities, a similar argument that I had in March, but back then it was way more favorable. I think it was like, 3 or 4 times the money you would earn, because as the S&P falls, the dividend yield goes up. So it was a great time to buy stocks. As stocks go lower in a low interest rate environment, like now you asked lower for longer, I believe, it's a very compelling case to buy stocks, especially, I know a lot of people are going to be like, oh, stocks are expensive, but the PE ratio of the S&P is not like stratospheric levels. It's elevated. And I can look it up right now if we want to have that discussion. But, these are not like tech valuations in the late 90s when companies weren't making money and profits and everybody was buying them. These are real companies making real money, facing real economic challenges from a pandemic. But there's a lot of businesses emerging and surprising everybody and releasing blowout earnings, and there are great investments to be had in equities. So I know I kind of got off topic, but as far as gold goes, once we get some resolution on these big question marks hanging over everybody's head, I would expect gold to calm down, just because you have a natural collection of capital for people waiting it out in gold. So once they have satisfactory answers, they can redeploy it to a place where they might seek a return.
Okay. What are some of the topics that you'd really like to cover that you told me off the air that you think are very important and you want to share with the audience? I give you the floor a little bit here so you can just lay out some things that you think investors should know.
Yeah, believe it or not, I think I sort of jammed them in the beginning there. I think, perhaps the biggest topic that I would say is, when I come on your show and I talk to you, I love when you ask me my ideas. It puts me off kilter a little bit. I got to think on my feet. I love that. But what I do every single day is measure data. And what has enabled me to fortunately be right about some of these calls is I analyze things from black and white, and I look at everything from the lens of big money. Big money is what drives markets. And here's, if I have the floor for a second, how did I learn that big money is so powerful? And I might have told you this story before, but long story short, one day it was my job to match buyers and sellers of huge amounts of stock. And I did that for, more than a decade and a half. And one day I got a call from a guy. He's like, I'd like to buy this stock. I looked it up quickly for myself. They were shrinking earnings. They had tons of debt. It was a brick and mortar retailer. It was falling apart. It was a terrible investment, in my opinion. This guy came in day one, bought $20 million worth of stock. I had this order every single day for 20 trading days, and the stock went up 70%. And I think I told you this. When all was said and done, I personally bought $650 million worth of this stock. Here's the point. It was a dog. It was a terrible stock, but it went up 70%. Why? Because somebody wanted to buy it, and he wanted to buy more than was available. And we were scraping the bottom of the peanut butter jar of the stock to get him shares. It turns out it was an activist hedge fund manager who wanted to take a sizable stake. He took more than 10% of the company, and he wanted to get on the board and affect change within.
Did it fare out for him, by the way?
Stock went straight down for a year. I think he lost a brutal amount of money, but it proved the point to me that when big money wants to play,
Yeah.
short term, it doesn't matter. So I took the other approach. I said, well, I want to know when big money is playing on the best quality stocks. And that's what Map Signals is all about. We pick these stocks that go up multiples of the market. The point of this is that even when the headlines are shouting doom and gloom and end of the world, and there's a lot of noise because the news media is there to sell advertising, and people aren't going to click ads if the story's about puppy dogs and rainbows. They're not going to watch something not interesting. But when you dig beneath the surface and you really look at what big money managers, what we think are they're doing with their money, we can get at least a clear picture of a path forward free from noise. So for my floor, the topic that I want to cover is that it is my belief and my 20 plus year experience that big money is what drives the markets. And again, big money's hedge funds, institutions, money managers. These guys have billions of dollars of budget, analysts working 80-hour weeks, a fleet of them. They got CEOs on speed dial. They got all this stuff that I don't have. So if I can just track them, I think I have a good
piggybacking.
Yeah.
Obviously. And what I like about it is these people are trained to buy. That's what they do. They either buy or hold. They usually, they're not in the business of selling. Like a retiree approaching retirement would liquidate his portfolio because of retirement. These guys get money in, they need to deploy it, which puts floor in the market. Jason, your service, mapsignals.com, it's either a silver level. You're not bullish in silver, but you have a silver level that's 500 a year, correct?
Matches my hair.
Yeah. You have a gold level, which is 750, correct?
Yeah, I'm going to just head over to the website because for whatever reason, I have a mental block about the...
Okay. Well, why don't you screen share a little bit here and show people what the service is all about? I know that you've had an 85% winning streak. Is it in 2020?
Yeah, in some of our service, so we we do a couple of different services. So Map Signals, if you're looking at the screen here, you would go up to Profit with Map and it would tell you all about our products. We have Silver, which is a bunch of insights every week that you don't get anywhere else. All the big money stuff you get. A list every month of the MAP 50, which are the most frequently occurring buys in the past 6 months. That's a very powerful list. That's 500 a year. MAP Gold adds an options trade each week, and MAP Platinum gives you this big money, the top 20 buy list. So each week you get the top 20 stocks that are bought and the bottom 10 that should likely be avoided or that we see selling in. You can do a monthly plan or an annual plan. That's Map Signals. So these are not, and you can see my ugly face there too. These are not trading services. These are research services that give people ideas. Separately, for the trading service, we write a newsletter for Legacy Research Group called Palm Beach Trader. That is the one that has an 85% win rate on our trades with an average gain of, I think last I checked before today, of course, is like 80%. Because again, the other thing I would talk about while I have the floor is we want to pick outlier stocks. And an outlier is, I think I showed it last time, it's like Michael Jordan, Wayne Gretzky, Warren Buffett, the best in their field, the best of the best.
Sure.
So out of 5,000 stocks, there are probably only 10 or 20 that are going to go up immensely more than the market. That's where we focus our efforts on trying to find them. I'll stop the screen share, but
thank you, Jason, very much. And let me ask you, go ahead.
One last thing. If people head over there and they want to get that white paper, they would go to mapsignals.com under Power of Map. You hit white papers, and it's this one, the market answer key, big money, and it'll tell you all about big money. And you just, click get the white paper, and you'll get it in your email.
Okay, perfect. Let me ask you in closing, one quick question. Are there times where the markets, let's say in the 2000s, when you had a sideways market in general with the S&P 500 and NASDAQ, et cetera, um, uh, these companies that big money comes into, I would assume that they don't have a perfect correlation with the markets. They can go up even in a sideways market or in a bear market because you're literally stock picking and not index picking. So is the value here even more accentuated during bad times for the general equities with this kind of system?
Yeah,
Okay.
absolutely. Right around the time we spoke last, March 30th, I believe it was. You can look on our website, Map Signals. We sent out a blog post saying, send in the Marines. And the blog post was all about, hey, times are tough. It looks desperate, but our data says now is the time to strap on a helmet and buy stocks. And we released a list of 15 stocks. And, at risk of, I don't want to discuss holdings that I have, but I have some household names that have been around since the 1980s that went up almost double. I'm sorry for the
Yeah.
dogs. I think somebody just walked in, but that represents the value
Yeah.
when times are tough. Yes, because everybody's throwing out the baby with the bathwater and people are not using logic. They're just acting on fear. And that, like Warren Buffett says, be fearful when
Yeah.
others are greedy and greedy when others are fearful. So
Gotcha.
it's hard to do when markets are falling apart and get
Yeah.
up on a show and tell everybody to buy stocks when there's despair, but that's typically when you'll find your value. Yeah.
Sure. Sure. And obviously, the more you approach retirement, the more you have to think of other things that are not investment wise pure. And I think that played into the fear of the baby boomer generation during March. They were like, I'm not going through this again. So,
Yeah.
Jason, thank you very much. Let's have you on in January so we can discuss like a year end for 2020 and some things that are happening. And it will be right around the time of inauguration. So we will have these.
So, my prediction is someone will be inaugurated. How's
Okay.
that?
Well, that's good. And hopefully one of the two candidates that are currently on. So
Good
to
point.
introduce another uncertainty. Well, Jason, thank you very much. We'll definitely air this tomorrow morning. We're doing this midday on Wednesday. We'll have this up on Thursday so people can check it out. And I really thank you for everything that you provided here. Thank you.
My pleasure. Next time it'll be from my office with no dogs nearby. So,
Yeah.
but
Thank you.
thank you for having me as always. I really appreciate it.